Industries that are hot, sectors set to outperform the market. That's what's here in Zacks Industry Rank Analysis. This week's Industry Rank Analysis is of particular interest, or at least it should be, because it deals with the bank sector. Charles Roplet, our senior market analyst for Zacks.com, puts this together every week, and that's what's on his radar screen this time around. And it's really important because it seems that the focus has shifted back to the bank sector now as they report profits or profit misses, and the stock market may be taking its cue now from the banking sector.
Yeah, possibly. As we record this on Wednesday morning, the markets are essentially flat, opened up a little bit down. But people are looking. There was an expectation heading into first quarter earnings that the numbers out of the banks could be better than feared. And initially, it looked like we had some good results. But when we start getting into this week, they're actually mixed, and it might surprise some people. Through Tuesday night, we had 10 positive surprises and 7 negative surprises. This morning, among the companies reporting, we had Morgan Stanley miss, we had Wells Fargo beat, so we can kind of adjust it to 11 to 8. And these are all S&P 500 companies. The bigger thing isn't so much whether it's 11 to 8, 12 to 9, whatever the actual number ends up being, but more importantly is that the numbers are mixed. And one of the things I discuss in here, it's not even so much that the numbers are mixed, but when you look at the companies that actually topped expectations, we're not seeing the full year consensus estimate being revised higher. And that's a really important point because it means that the analysts don't necessarily buy into the fact that the sector's turned around, that some of the positive trends in the first quarter are sustainable or will last throughout the rest of the year. And it really extends the trend that we've seen for more than a year of full year forecasts being cut across the board. That happened all throughout last year. It's continuing through this year. And it's a major problem because what it really means is that nobody knows what a bank stock is worth, what it should trade at, what its price target is. It remains a huge mystery and nobody knows.
Yeah, that's an interesting point. The miss by Morgan Stanley that they reported, does this bring back now renewed concern over bank sector profits among market participants?
Well, I don't necessarily know if it brings back renewed concern, but it just kind of highlights the fact that there is concern and about the fact that bank forecasts are not rising. And certainly Morgan Stanley's not alone. It's the 8th banking firm, and I'll put Morgan Stanley as a banking firm because obviously everyone's now converted and we can throw Goldman Sachs into that group, even though they're not a traditional, Bailey Savings and Loan we had.
Yes.
They're not traditionally like that, but, we can kind of throw them in because now they're actually lumped in together with the whole TARP funding. But I think what it goes to show is that the numbers aren't as good as people thought, even with the free money, even with the adjustment to the balance sheets. And it really goes back to the point I made a second ago, is that analysts really do not know what bank forecasts are, what bank earnings are going to be this year. And as a result, they're having a hard time adjusting the forecast. And it's pretty interesting because I talk about 3 examples of banks that actually topped expectations. In all 3 cases, you don't see the consensus estimate rising, you see it falling. And more importantly, over half the covering analysts on each bank have not even adjusted the forecast. Now, maybe it's a timing issue, but I think it's really more to the point that a lot of analysts are really not sure where to peg their numbers at. And that's a huge question mark. And if you're thinking, oh, this bank's a good price because it's trading at 16 or 25 or whatever the stock price is, you really got to take a look back and say, okay, well, if analysts don't know what these banks are going to earn this year, how do I know what the bank is going to earn this year? And therefore, how do I value the stock? On the flip side, if you say, well, look at their balance sheets, again, you start delving into Tier 1 capital ratios, into how strong their balance sheets are. Banks really don't know. We're having a lot of numbers being thrown out, but it's very questionable, not to mention the possibility that shareholders right now could see their stakes diluted by the government.
I find it kind of curious that as these banks now scramble to pay back the TARP money that they borrowed, the federal government is sitting there saying, oh, wait a minute, there's no rush. Don't rush. Take your time. We really don't need the money.
Yeah, it's an important point, and it's important for 2 reasons. First of all, I think it speaks volumes that the Treasury Department does not have an exit plan for TARP. I don't think anybody knows what the end game is. Maybe Timothy Geithner does have a plan. If he is, he's not doing a very good job of expressing it. But the other thing is, I think a lot of people are fearful that if we allow some banks to pay back, but not others, it could create a run. I mean, for instance, consider that Goldman Sachs is allowed to pay back their funds, JP Morgan's allowed to pay back their funds, Citigroup, Victor Pandit now wants to pay back his funds too, but what the government says, no, Citigroup, we're worried about your balance sheet. We don't want you paying back the funds, but we'll allow Goldman Sachs and JP Morgan will. Well, obviously, Jamie Dimon's going to be very excited, not only because he gets out of the cover of a chart, but more importantly, you could see a lot of people with depositors or people with bank accounts with Citigroup suddenly being scared about the safety of their bank, switching to JP Morgan or maybe a Wells Fargo or another bank, and that could create a potentially even larger crisis. So I think Gaynor has to work a fine line between making sure that no one really freaks out about their bank, but having a clear exit plan where everybody understands and it doesn't create a run on the banks. I don't envy him for having to make that decision. I don't envy Bernanke to having to play a role in that. But we do have these guys in position, and they are expected to have an exit plan. Right now, we just don't. And without an exit plan, I think it just adds to the uncertainty of what these bank stocks are worth. And I think for investors, the big takeaway is the short-term risk remain extremely high. And if someone's going to play in the bank stocks, I think they need to treat them as a call option and really realize they could take a huge loss very quickly on their positions.
Okay, some good points there. Read all of the latest on bank sector profits and losses in Charles' Industry Rank Analysis, currently on Zacks.com. Go to the homepage, scroll down until you see the headline underneath the Industry Rank banner, and click on it. It'll take you right to it. With Charles Rotblatt, I'm Terry Ruffalo.